Thank you, Madam Chair. Let me just say, and to try and kind of personalize this to the people that I represent, I mean, I think the biggest question that we're faced with is what needs to be done to ensure that farmers, ranchers, and investors and others who utilize commodities and futures can be protected from losing their money through misuse of customer funds, as has occurred with MF Global and now with Peregrine Financial Group, even though there are laws and regulations that have been in place to prevent these types of losses from occurring. And I think any time we talk about making changes to any regulatory structure, that we as lawmakers need to ensure that we emerge from these bankruptcies with what we've learned and able to provide adequate legislative and regulatory modifications to ensure that those types of scenarios don't occur again. And we also need to make certain that what we do doesn't create overly cumbersome compliance requirements and overtake normal oversight operations. So that said, the Peregrine Financial Group bankruptcy and the misuse of customer funds that occurred there, given the fact that MF Global occurred just 9 months earlier, is really troubling. And CFTC has made some changes since that time, including implementing some reforms, Rule 125, which is known as the MF Global Rule. But it's not clear that these rules have enabled the CFTC to more effectively oversee their self-regulatory system of the futures industry. That point aside, and I would ask this question, I guess, to Chairman Gensler and to Commissioner Summers, would you agree that the self-regulatory structure of the futures industry, along with some proposed reforms that various self-regulatory agencies have been discussing, is capable of regulating the modern futures industry?
I think that the system can work. I think it does need some enhancements, and I do think, given that we're also going to ask the NFA to register swap dealers. We actually had our first swap dealer register with them last Friday. But as they start to take on those examination functions, they'll have to step up their resources, which they plan to do, but they'll be challenged. And firms will fail in the future. Firms should be allowed to fail in our system, I believe, in our system, not have taxpayers back it either. But when they fail, the customer money has to be fully protected, and that's what we, as you say, lessons learned from here in this system. But I think it can work with enhancements.
Mr. Summers.
Senator, I agree. I think the self-regulatory system has worked for the history of the futures industry, and with the enhancements that have been identified, unfortunately, Peregrine happened before we were able, as the Commission, to implement any further enhancements to our own rules. But we plan to do that, and I'm hopeful that we'll get to that as soon as we can.
Let me ask, since the passage of Dodd-Frank, do you think the CFTC is spending so much time writing new rules and regulations that it hasn't had time to adequately or enforce the existing ones, like the segregation of customer accounts?
I think that we are stretched, but we are very much focused on the futures market, and we've restructured our group that oversees intermediaries. We were working on, you referred to Rule 1.25 well before some of the swaps rules, and even this LIBOR case is an example. I think hopefully I can speak for both of us, so proud of the Division of Enforcement to bring this case that they started working on in April of 2008 on something that 70% of the futures industry is related to LIBOR. So we're very much focused on the futures market and farmers and ranchers, but we are stretched thin because the futures market has grown so much, and now we have these new obligations in the swaps market as well.
Yeah. Mr. Summers, what do you think? Spending too much time on Dodd-Frank to keep up with the stuff you have to do already?
Well, I do believe that we identified many of the enhancements that we could have made to the futures industry 6 months ago. So the changes that are before us now are changes that we could have implemented months ago.
Let me thank you. Let me ask Trustee Giddens, in your testimony you provided recommendations for legislative, regulatory, and other reforms that might help avert similar liquidations in the future. And I guess the question is, what would you say is the single most important and effective legislative change that should take place based upon your experience with MF Global?
I think the one that would have the most material effect would have been the consideration of the creation of a modest investor protection fund. Something, as I say, the number of customers we discovered, unlike securities customers, the average account here was less than $100,000. So it's a modest amount of money, up to $100,000. Would have, and the shortfalls might have been $20,000 per account or something, would have permitted sort of seamless restitution to these customers early on. Now, whether that's whether the cost of that or it's practical and so on, but I think that recommendation or something like that would be the most important.
Okay, thank you. I see my time's expired, Madam Chair. Thanks.
Thank you very much.